Picture this scenario, because I guarantee it has happened to you or someone you know. You are standing in the express lane at CVS on a Tuesday night. You have exactly one item in your hand, a single pack of Advil, the small one, 6 tablets for $8.99. You know, logically, that if you drove 15 minutes to Target, you could buy the 50-count bottle for $12. That is 24 cents per pill versus $1.50 per pill. You would save money. But here's the problem. You have $11.47 in your checking account right now. Payday is not until Friday. You cannot afford to spend $12 today, even though it would save you money tomorrow. So you buy the expensive small bottle. You have just paid a 525% premium for the exact same medication simply because you did not have an extra $3 to spend today. Tell me if this sounds familiar. You are not being stupid. You are not being irresponsible. You are being mathematically trapped by the absence of capital. And this is not just about Advil. This pattern repeats itself in every corner of your financial life, from the car you drive to the apartment you rent to the interest rate on your credit card. When you do not have money, everything costs more. Not a little more, dramatically, measurably, systematically more. I spend way too much time reverse engineering the hidden mathematics of wealth inequality. If you have ever felt like you are working your ass off but somehow bleeding money faster than you can earn it, or if one unexpected $400 expense would completely derail your month, make sure to hit that subscribe button. Because today, we are not talking about budgets or side hustles or crypto. We are talking about something far more insidious. We are talking about why not having money is the most expensive position you can possibly be in. Here's the thing about poverty that most personal finance influencers completely miss. They will tell you that building wealth is about discipline. Stop buying coffee, cancel subscriptions, cook at home, as if saving $47 a month is going to fundamentally transform your economic position. But that advice ignores a brutal economic reality that has been documented for decades. There's a term for this phenomenon. It is called the Ghetto Tax, and it was formally studied and named by the Brookings Institution in a 2006 report authored by Matt Fellows, a senior research associate at the time. The basic concept is this. Low-income Americans pay significantly more than middle and upper-income Americans for the exact same goods and services, not because they are making bad choices, but because the infrastructure of poverty is designed to extract maximum cost from people with minimum capital. Fellows found that lower-income families were paying as much as $3,000 more per year than wealthier families for identical financial products. And honestly, that number is conservative. The real tax is much higher when you factor in everything. Most people think being broke means you just have less money to spend. That is true. But what they do not realize is that being broke also means you pay more for literally everything you do buy. Let me give you a concrete example from the Brookings research. Take car insurance. If you are a middle-class person with good credit living in a safe zip code, you might pay $1,200 a year for full coverage on your Honda Accord. Now, take the exact same person, same driving record, same car, but put them in a low-income zip code with bad credit because they missed a credit card payment 2 years ago during a medical emergency. That person is now paying $2,400 a year for the same coverage. Same driver, same car, same risk profile. Double the price. The insurance company is not charging you more because you're more likely to file a claim. They are charging you more because your credit score is low. And your credit score is low because you were poor. You are being punished with higher prices for the crime of having been unable to afford things in the past. Think about that logic for a second. The system identifies that you have struggled financially, and the response is to make everything more expensive for you going forward. It's not a safety net. It's a trap that gets tighter the more you struggle.
But here is where it gets really dark. Let me walk you through the actual math of what it costs to be poor in America today. We are going to break down 5 major categories where the ghetto tax hits hardest, and I want you to add these numbers up in your head as we go, because the total is going to make you genuinely angry. Category 1, banking and financial services. If you have a Bank of America checking account and you maintain a $1,500 minimum balance, your monthly fee is $0. You get free checks, free ATM access, maybe even 0.01% interest, though, let us be honest, that is basically nothing. But let us say you're living paycheck to paycheck. You have maybe $200 in your account at any given time. Bank of America now charges you a $12 monthly maintenance fee. That is $144 a year just for the privilege of having a bank account. But it gets worse. According to the Federal Deposit Insurance Corporation's 2023 survey, the average overdraft fee in the United States is $34. If you overdraft just once a month, and trust me, when you are poor, that is easy to do, you are paying another $408 a year in overdraft fees. So before we even talked about actual purchases, a poor person is paying $552 a year in banking fees that a wealthier person pays zero for. Think about that. You are being charged more than $500 annually for being poor. Category 2, credit and loans. A person with excellent credit can get a car loan at around 5% APR right now. Let us say they finance a used $20,000 Toyota Camry over 5 years. Their monthly payment is $377. Total interest paid over the life of the loan is $2,645. Now take someone with bad credit. Same car, same loan term, but their interest rate is 18% because their credit score is 580. Their monthly payment is now $508. Total interest paid is $10,205. That is $7,560 more in interest for the exact same car simply because they have bad credit. And why do they have bad credit? Because at some point in the past, they could not afford to pay a bill on time. The punishment for past poverty is permanently higher prices. But here's what actually happens in real life. Most people with bad credit can't even get approved for a traditional auto loan, so they end up at a buy here, pay here dealership. These places are financial predators. They sell you a car worth maybe $5,000 for $12,000. They charge you 24% interest, and if you miss a single payment, they repo the car, keep all the money you have paid, and sell the same car to the next desperate person. A 2020 study by the National Consumer Law Center found that the average buy here, pay here customer pays $1,500 more annually than a traditional auto loan customer for worse cars with higher breakdown rates. Let me pause here and stack some numbers for you. We're only 2 categories in, and we're already at over $2,000 per year in additional costs, banking fees plus credit premiums. That is not a typo. A poor person is paying $2,000 more per year just to access basic financial services. Category 3, housing. This is the big one. The ghetto tax on housing is absolutely brutal. According to the Census Bureau, the median rent for a 2-bedroom apartment in the United States is around $1,350 per month. That is $16,200 per year. But here's the thing. If you had the capital to buy a modest home, your mortgage payment on that same property might be $1,100 a month. That is $13,200 per year. The renter is paying $3,000 more annually for the exact same housing, and they are building zero equity. Over 10 years, that's $30,000 in additional costs, plus the loss of whatever home appreciation would have occurred. But wait, it gets worse. Most landlords in low-income areas require first month, last month, and a security deposit up front. That is $4,050 just to move in. If you don't have $4,000 saved, which most Americans do not, according to the Federal Reserve's 2023 report on economic well-being, 37% of Americans cannot cover a $400 emergency. You are locked out of even applying for many rental units. So you end up in a worse apartment with a slumlord who charges you $1,500 for a place that should rent for $1,200 because they know you have no other options. You are paying a desperation premium. Now here's what really gets me. To buy a home and escape this rental trap, you need a down payment. Let's say 10% on a $250,000 home. That's $25,000. But if you're paying $1,500 a month in rent and barely scraping by, how are you ever supposed to save $25,000? You are trapped in a cycle where you cannot afford to stop renting because renting prevents you from saving enough to buy a home. It's a catch-22 designed by the universe to keep you exactly where you are. Category 4, transportation costs. Remember that buy here, pay here car we talked about? It's not just the price, it's the maintenance. According to AAA, the average American spends about $9,666 annually on vehicle costs, including loan payments, insurance, gas, and maintenance.
But that is for someone driving a reliable car. When you are poor, you cannot afford the reliable car. You buy the $3,000 beater with 160,000 miles on it. That car breaks down constantly. A 2019 study by the Transportation Research Board found that low-income car owners spend 30 to 40% more on vehicle maintenance per mile driven because they are driving older, less reliable vehicles. Let me give you a real scenario. A middle-class person buys a 3-year-old Honda CR-V for $22,000. Over the next 5 years, they spend maybe $3,000 on maintenance, oil changes, brakes, tires, basic stuff. A poor person buys a 12-year-old Chevy Malibu for $4,000. Over the next 5 years, they spend $6,000 on maintenance. Transmission repair, $1,800. Alternator, $450. Water pump, $600. Random sensors, $400. And then the car dies completely, and they have to buy another beater and start the cycle over. Same 5-year period. The poor person spent $10,000 total on cars and maintenance. The middle-class person spent $25,000, but they still have a functional vehicle worth $12,000. The poor person has nothing but receipts and stress. Category 5, daily goods and services. This is where the poverty premium shows up in 1,000 tiny cuts. If you have $150 to spend at Costco, you can buy toilet paper at 52 cents per roll. If you have $6 to spend at the corner store, you are paying $1.89 per roll. You are paying 264% more for the same product because you could not afford the bulk purchase. This applies to everything: laundry detergent, diapers, garbage bags, rice, canned goods. The per-unit cost is dramatically higher when you can only buy small quantities. A 2018 study by the Institute on Assets and Social Policy at Brandeis University found that low-income households pay on average 5 to 25% more per unit for groceries compared to higher-income households shopping at bulk retailers. And here is what changes everything. Let me add this up for you. Banking fees, $552. Credit premium on car loan, $1,500 conservatively. Housing premium, $3,000. Transportation premium, $3,000. Daily goods premium, conservatively, $800 per year. That is $8,852 per year. A poor person in America is paying nearly $9,000 more annually than a middle-class person for functionally the same life. That is $738 per month. That is $24 per day. Think about that for a second. Every single day you are poor, you are paying a $24 penalty just for existing in a state of poverty. That is not including the opportunity cost of not being able to invest. That is not including the mental health cost. That is not including the time cost of taking the bus instead of driving or going to the laundromat instead of having a washer-dryer. This is purely the direct financial ghetto tax.
Now here is where I get genuinely frustrated. This is not an accident. This is not bad luck. This is not you making poor decisions. This is a system that has been mathematically designed to extract maximum revenue from people with minimum resources. And the people who built this system know exactly what they are doing. Banks budget for overdraft fees in their annual revenue projections. According to the Consumer Financial Protection Bureau, banks made $12.4 billion in overdraft and non-sufficient funds fees in 2020 alone. They know that 9% of account holders generate 79% of all overdraft fees. They know these are the poorest customers. They know these fees cause genuine hardship, and they keep charging them anyway because it is profitable. When you overdraft by $5 and get charged $34, that is an effective interest rate of 680% on a one-day loan. If a payday lender did that, we would call it predatory. When Bank of America does it, we call it policy. The credit scoring system is the same. Your credit score is supposed to measure your credit worthiness, but what it actually measures is your history of having money.
If you have never had a credit card because you have never been able to afford the risk, your score is low. If you paid cash for everything your whole life, your score is low. The system punishes you for not participating in debt, and then, because your score is low, you are charged higher interest rates on the debt you are forced to take on. It is a circular trap. Insurance companies use credit scores to set premiums, even though study after study has shown that credit scores are not predictive of insurance claims. A 2007 Federal Trade Commission study found that using credit scores in insurance pricing disproportionately harms low-income and minority consumers. The industry knows this. They do not care. It is legal, it is profitable, so they keep doing it. And here's what really gets me. The financial advice industrial complex tells poor people to just save more, spend less, be more disciplined. But they ignore the fact that the entire system is designed to make saving impossible. How are you supposed to save $1,000 for an emergency fund when you are paying $738 a month in poverty penalties? You are not failing to save because you lack discipline. You are failing to save because you are being systematically robbed. This is not a personal finance failure. This is a policy failure. This is a system that has decided poor people are profitable and has engineered every institution to extract from them. You are not broken for struggling. You are being exploited.
So, what do you actually do with this information? The answer is not quit your job and live off the grid. We have bills, we have responsibilities. The solution is to systematically attack the ghetto tax line by line until you break free from the trap. Here are 4 strategies that work. Strategy 1, the banking escape. Your first mission is to eliminate banking fees completely. Open an account at a credit union or an online bank like Ally or Chime that has 0 monthly fees and 0 overdraft fees. Yes, these exist. Ally reimburses ATM fees. Chime has no overdraft charges. Transfer your direct deposit. Close the predatory bank account. This single move saves you $552 per year. That is $46 per month back in your pocket immediately. Strategy 2, the credit rebuild protocol. If you have bad credit, your most important financial goal is not investing in the stock market. It is raising your credit score. Get a secured credit card. You put down $200 as collateral and you get a $200 credit line. Use it to buy gas. Pay it off in full every month. In 12 months, your score will improve by 50 to 100 points. That improvement will save you thousands on your next car loan or apartment application. A 2022 study by the Federal Reserve Bank of New York found that improving your credit score from fair to good can save you $5,000 to $10,000 over the life of a typical auto loan. This is a guaranteed return on investment. Strategy 3, the bulk buying bridge. You need to artificially create a one-time period where you build inventory. Save $100, go to Costco or Sam's Club, buy toilet paper, rice, canned beans, laundry detergent. Yes, it hurts to spend $100 at once, but you just bought 3 months of supplies at half the per unit cost. You are no longer paying the small quantity premium every week. This strategy requires upfront pain for long-term savings, but the math works. If you were spending $80 per month on household goods at the corner store and you cut that to $50 by buying bulk, you are saving $360 per year. Strategy 4, the transportation patience play. Do not buy the $3,000 beater. I know it's all you can afford right now, but that car is a trap. Instead, save aggressively for 6 months. Sell something. Do DoorDash on weekends, borrow a bike, do whatever it takes to get to $7,000. Then buy a 10-year-old Toyota Corolla or Honda Civic with 100,000 miles. These cars are statistically the most reliable used vehicles in America. Your maintenance costs will drop by 60% compared to a random beater. You are not buying a car, you are buying freedom from the transportation poverty trap. Look, I am not going to lie to you and tell you this is easy. The system is rigged against you. It takes 10 times more effort to go from $0 to $10,000 in savings than it does to go from $10,000 to $100,000. The wind is in your face at the start. But once you understand that being poor is a $9,000 annual penalty, you stop blaming yourself for struggling and you start attacking the penalties themselves.
You're not bad with money. You are navigating a system designed to bankrupt you. The goal is not to get rich next year. The goal is to stop bleeding $738 per month. Every penalty you eliminate is a permanent raise. Every poverty trap you escape gives you more breathing room to escape the next one. If this video made you realize you have been paying the ghetto tax without even knowing it existed, share this with someone who needs to hear it. We do not talk about this stuff enough. We talk about stocks and crypto and side hustles, but we rarely talk about the systematic financial extraction happening to millions of people every single day. Hit that subscribe button because we are going to keep exposing these traps until everyone knows how the game is really played. Thanks for watching, and I'll see you in the next one.